So please do note, by the time I'm recording this, the entire cryptocurrency market cap is just about 900 billion US dollars. At a certain point, Bitcoin alone was about $1 trillion. Just Bitcoin alone, imagine that, just Bitcoin alone was over $1 trillion US dollars in market cap. Right now, you have the entire cryptocurrency market space at 900 billion US dollars. That shows you how much money got sold down, how much money got taken out also from this space in general. Hey guys, so in this video, I want to at least make sense of what's going on in the crypto market. Why is it down? Why has it been down for an extended period of time? And please do note this, that it's really not just the cryptocurrency market that's down. It's been happening also to stock markets globally. You could see major indices like the S&P 500, NASDAQ, and the Dow Jones Industrial Index down also. So it's not just really the cryptocurrency market that has been hit, but majority of the large asset classes around the world that are being battered down. One of the reasons why a lot of the focus is in the cryptocurrency market also is primarily because it has a lot of volatility. If you see stocks go down by a certain percentage, you could expect the cryptocurrency market drop massively more than what's happening in the stock market. And it also adds to the fact that there's a lot of speculation in the cryptocurrency market space, and there's a lot of tokens, coins, and projects that really don't have projects that are really good, that their projects were just there when everything was good, when there was a lot of hype. There were people who were willing to throw money around because they believed that it would go higher. But that being said, when the market is bearish, when everyone's scared, when people don't know where it's supposed to go, when people don't have ideology where the market is, and there's a lot of fear, uncertainty, and doubt, a lot of those altcoins, and you've seen it over and over, have dropped 90%, 95%, some 99%, and some even after this entire cycle won't go anywhere. Even after this entire cycle may not even rebound. And that's why there's a bigger sense of uncertainty in the cryptocurrency market versus the stock market, that when you look at the stock market, it's volatile, it could drop, but as long as the company is doing well, as long as the company has earnings, as long as the company is expanding, there's something tangible that people could actually see. Unlike in the cryptocurrency market space, a lot of these projects that we're looking at are actually just starting. Some of the smart contract blockchain, some of them are just building dApps on top of it still. And I always say this, that it's the level of uncertainty that causes people to stay in the sidelines. If you look at how things are, also a lot of the people who entered, especially retailers who are relatively younger, would come in just because they saw friends start to make money, regardless if it's via meme coin, a play to earn token, or project. But people came in because they wanted to earn, and it always won't be that way. It always won't go up. It always won't be a cycle that it will just continually move up and it won't drop and it won't correct, because in whatever market you're in, it's always driven by supply and demand. That being said, what's causing this entire downward shift? I've made several videos about it, discussing it further, but it all started with the US printing massive amounts of money during the lockdowns during March 2020. And if you look at it from that perspective, they needed to print that much money to be able to kickstart their economy, to be able to give money to people who didn't have any jobs, to give money to people who were affected from the virus. So they handed out money to people. They printed money also to stimulate different markets, and part of that stimulation went into the stock market. Part of that stimulation went into the crypto market. That's why you saw large amounts of money. You saw Tesla make massive moves up. You saw Microsoft make massive moves up. You saw Apple, Amazon, Zoom, etc. make massive moves up in 2020. The same could be said also to the cryptocurrency market. We saw it have larger moves, particularly in 2021, but it already started to move up in 2020. And now what's happening is this, because inflation figures for the US is high, one of the highest that we've ever seen in years for them. The last time it was at this figure was around 1994, and I was still in elementary at that particular time. So we haven't seen this much inflation for a very long time. So please do remember this, that what they did to combat the effects of COVID, or at least the lockdown, to have their economy, was to do quantitative easing, printing more, low interest rates, and the pitfall of that was high inflation. We are seeing now the results of all of the printing that happened. One of the things that they could do to be able to combat combat inflation is basically two things. Number one, stop the printing. Whatever they did, pause it, stop it. The cause and effect of that is no more free money, no more extra money moving around. A lot more companies, institutions would be more meticulous in how they deploy their capital. Because when there's a lot of free money moving around, it's easy for people to be able to just throw money in different areas as an investment or as an expense. But when there's lesser going around, people will be more selective in where they need to put it and where they want to put it. And as what I've mentioned, what propped up the market was that free money moving in the stock market and moving into the crypto market. Now it's gone. You won't have that amount of money, that demand, to start to push it up or add to that and to buy higher. Please do remember this. What causes markets to go higher is when you have more buyers willing to buy it at a higher price. But when there's no cash to be added, no free cash to be added for them to be able to buy high, then they become more selective. When they become more selective, the market systemically does not push up or push as fast as what it's supposed to be, or similar to what we saw in 2020 and 2021. Above and beyond them tightening the money that's going out and moving around, they raised interest rates. So they raised about 0.75%, which is something that's very high, something that they haven't done. There's a belief that they haven't stopped yet, that they're gonna raise rates even more. I think one of the things that they're trying to protect is inflation. One of their mandates is to protect the American economy from inflation. And you might be asking, why is this happening around the world? If this is just happening in America, why does it affect all of us? Why does it affect all of the biggest markets? I'll go to that in a bit. But their mandate is to protect inflation. And I've mentioned it already earlier that they stop printing, lesser money moving around. It somehow protects prices from going higher. Second is, when they raise interest rates, it becomes harder to borrow money. And when rates are higher, people who want to borrow for a car, for a house, to expand their business, they somehow will temper it a bit. They somehow won't do anything first. They somehow will just wait on the sidelines to see how it will actually go. Because every time you raise rates, it actually means that people would need to pay more. When you raise rates also, people tend to spend less. Also, similar to what I've mentioned earlier, they will be more selective, they will be more strategic in how they actually go about their spending. They will be more strategic on how they go about their expansion. But in a way also, you have to look at it from this perspective. From an investor standpoint, when you are a fund or you're an institution that has billions, every time government raises rates, it's guaranteed money that whoever would invest in these bonds would get 0.75% free money that did not exist before. If they continue to raise it, that means that those who would buy those bonds would get free money that they did not receive before. Please do remember this. Every time it's a government bond, US government is mandated to back it up, to pay it, and it's considered risk-free. If you're an institution that have billions, now you have a chance to actually get more without any risk. And if you're handling billions and you get something that's risk-free, you get a higher rate of return with an expectation that it could still even go higher, then they would go for that. And the adverse effect of that is you would see money flow out of assets that are considered either riskier or more volatile. Traditionally, that's a stock market, and that's why you've seen the stock market go down, because you see people pulling out of the market, putting it into fixed assets. However, one other asset class that people would consider that's relatively riskier than bonds is the cryptocurrency market. That's why how the US market or growth stocks move. Bitcoin also moves almost in tandem, however with more volatility. If Bitcoin is down, the other cryptocurrencies will also follow. But the other cryptocurrencies, those altcoins, get wrecked even bigger. Those altcoins get dropped even stronger as well. So you have altcoins drop massively, then you have Bitcoin also drop, then you also have the stock market also drop. So they all move in tandem. So please do note, by the time I'm recording this, the entire cryptocurrency market cap is just about 900 billion US dollars. At a certain point, Bitcoin alone was about $1 trillion. Just Bitcoin alone. Imagine that. Just Bitcoin alone was over $1 trillion US dollars in market cap. Right now, you have the entire cryptocurrency market space at 900 billion US dollars. That shows you how much money got sold down, how much money got taken out also from this space in general. Those are the two things. And you could look at a lot of factors also that are hitting the economy, from the logistics, from the supply chain glut that we have, plus the war that's happening in Ukraine and Russia that also impacted oil. And as you all know, by the time I'm recording this, oil is also high. Oil prices are high, and if oil prices are high, it affects everyone that imports oil around the world. Given that inflation is already high, when oil prices go higher, then it puts another pressure on how inflation would be over the next few months. How can we expect this to get better? I think one of the things that people should look out for, at least if you're looking at it from how the US economy will be, is inflation. If inflation goes lower, then there's a possibility, there's a narrative that may stop or taper off the rate increase, or if they actually need also that, okay, inflation is lower again, that we may start quantitative easing, we may start printing more. Unless inflation continues to push up, or at least it doesn't taper down, or it doesn't stabilize at a certain point, then we may see more of this. So if you're thinking about what would be the trigger, I would look at still what's happening in the US economy, the largest economy in the world. What happens in the US and the policies that they make affect a lot of these funds that are invested in the largest markets in the world, not just in the stock market, but also in the cryptocurrency market space. Now, you might be asking, what should you do? I'll make another video after this, which will come out tomorrow, talking about what should you do in this particular season. But one thing is for sure, don't panic, don't be scared. When you panic, that's when you lose. When you panic, you decide based off emotions, and when you decide based off emotions, you don't get to do what's best for you and your portfolio and your financial goals. So I hope you got a lot from this. If you stayed up until this point, appreciate it if you could like, share, subscribe, and smash the bell so you get updated every time I come up with new content videos about investing in stocks, cryptocurrencies, and NFTs. And if you want to know more about investing, I have masterclasses below, fundamental analysis, technical analysis, and also investment 101, where we tackle Bitcoin, crypto, altcoins, NFTs, stocks, bonds, REITs, and so much more. It's on demand, where you can watch it anytime. And aside from that, I have books available via Shopee. You can order it for those who want to read and learn more about it. So I guess that's it for now. Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.